Okay, so in this indicator, it's called the Choppy market warning, and it is a bit more complex. Okay, what we'll do is we'll just apply it to make it simple to the S&P. And the volatility index you may have heard of for the S&P 500 is like the VIX. They also have the VSX. We have actually all the index settings over on our site. But if you go in and you add the indicator right here, choppy market warning, and hit new, it'll say, what index do you want to use? Now, to get these indexes, you're not going to get them through AMP, okay? You're not going to get them through FXCM. You're going to have to, they're about $5, okay? But you have to add them onto a base subscription like an IQ feed. So it'll cost you money to use this indicator. You will be okay without it. It's a cool indicator. It is not going to make or break your world. It is not the holy grail, okay? I like it. I use it. I already have the base subscription, so $5 more for me is no big deal. It definitely needs to be, it's a fun add-on toy, okay? But it is useful. And over in the forum, I'll show you where to find this information, okay? So right here under the trading question forum, I know I got this stuff sort of on top, but and then I'm gonna type in choppy market, and let's see here. We ought to have Apex choppy market warning video right there, and I go through and I talk about how to set it up, and I go through what it is in detail. Also, I list out different volatility indices and give you the exact list if you go through everything on here. And talk about how to set them all up and which one to use on which index, like the S&P 500. There's all these different ones, like step by step, what to add in. Okay. Let's see here. I think on the next page, second or third page here, I make it really, really easy for you. But like a lot of people think VIX is what you should use, and that's not what you should use on that, because VIX actually tracks the SPX, which is the index. It's not the futures implied volatility. So what you want to do is you want to actually follow the correct one for the right market. You can even use this on Apple. You can use it on Goldman Sachs, Google, IBM, Amazon. Okay, you got it on corn and soybeans, the Russell. The VIN is for the S&P. VXD for Dow, VXN for NASDAQ. So I list them all out there for you. And then what you'll have to do when you add it is you'll have to go in and you'll need to make sure you add, I recommend you add each one of them. I haven't done it since I did my latest update on Ninja. But I'll show you how to add in, like, say, the VIN over here. And this is if you have an IQ feed subscription with the CBOE volatility indices. I'll just click new because I actually have to add these in. I mean, they'll have things like VIX built in, but it won't have a lot of the other ones. And I'll put VIN right there. I'll choose CBOE. I got default 24/7. That's what I put on everything. Okay, and I can put SP 500 volatility indice 40S. And I go to miscellaneous, and I go down here to IQ feed. And VIN.XO. So if you're wondering where I got that information, again, I have all that for you already built in. VIN.XO CBOE. Okay? And that really should be, I believe, all that I need on there. Oh, I need to choose index right here. Instrument type index. And that should work. Okay. I can add it if I want to. I don't have to. I can add it to my default list. And notice that it'll have that little up arrow right there, which is your shift 6. You'll need to use that anytime you want to actually look at or apply that indicator. So let's go here and let's look at the indicator again, and I'll add choppy market warning. Click new on that, and then I'm going to just change this to VIN. Okay. And we'll click OK. And basically what this is doing is it's looking at the trend of the market using the volatile trend line indicator, but then it is also changing the formula up and factoring in the implied volatility in the market. Just as volume precedes price, so does implied volatility. And the reason is because what will happen is traders will back off of trades, like especially down in the pit. Okay, I'm about to short 100 contracts of S&P. Thanks for the heads up. Guy calls his friend over in the S&P E-mini options pit, and he throws on some puts, covers the position. It drops down. We're done now. Okay, now go ahead and take them off. And so those options, that demand for options will come in real quick right before there's a change in the market. And here's an example this morning on the S&P. Notice how we had a divergence, and this is all that we care about. We don't care about whether it's green or red. I don't care about whether it's up or down. I don't care about how far apart it is. I only care about one thing: different colors. Okay, that's it. In fact, I actually plot this whenever we have it up inside the trade room. I plot this as blue and yellow. So you may even want to do that right now. You can go in, you can change the up color, if you want to blue, and the down one, the yellow, whatever. If you like different colors, use different colors. Doesn't really matter. Okay, it's a little more visual. So blue and yellow right there, because it's not about trend. Okay, this is about what I care about is a warning. Now, this is not going to tell you every time the market's going to be choppy. This is going to tell you when it's a warning alert. It's like, hey, options are diverging from price. Okay, meaning like if the market is going to fall, implied volatility should rise. Okay, because demand's going to go up, fear is going up. That's sort of what the VIX is a measurement of fear. If the market's going to rise, implied volatility should go down. People aren't buying a whole bunch of puts to manage all their stocks. Okay? But what about when the implied volatility is going up and the market's not going down? Or implied volatility goes down and the market's not going up. Maybe it's flat, or maybe it's going the opposite direction. When that happens, you'll see that divergence. So like right here, we saw the market was running up and had a little bit of a pullback, but then it started going, it may go up again. Okay, right? So right here, you're seeing this. But then we're getting like this chop right here, and you're wondering, okay, is it going up? Is it going down? What's happening? We get a divergence. That usually means back off or expect a reversal. Okay? And as you can see, the market did reverse. So it's a pretty sweet indicator. It doesn't give too many signals, which is nice. You can use it on 4-minute, 5-minute, 10-minute, whatever you want to. The tighter it is, the more signals it'll give. The slower it is, obviously the less it'll give. So you can play with that. You can test it out, but you do need that data feed. And you need to make sure you use the right indice. So like there's like GVZ for gold, and there's RV, whatever it is. Z, what is it? I got the list over here. Again, it's under the Choppy Market Warning video. Just type in Choppy Market Warning. But yes, we got, VIN for ES, VXD for YM, VXN, RVX for Russell, VIX for SPX. We got the, corn, soybeans. There's gold. So there's even a euro dollar one that you can use on I'll use it on any FX pair just to give me an FX, measurement because, you can. So, but it's pretty cool. You just put on there. It's a very much style indicator. It's not an ABC indicator. So it's to give you a warning, a heads up that, hey, choppiness may soon be upon you. And it was, and then, bam, market fell right down on its face. Okay? And this is just, I'm not, cherry picking. This is just this morning on the S&P right here. Okay, well, that is the Choppy Market Warning. And if you want to check it out, definitely dive into it. Ask questions on the forum. We'll be glad to help you out on that one. And again, all these come with the, pretty much all these come with at least the Elite Toolkit. Most things come with the toolkit for P3 members.